Mike Zuzolo of GlobalComResearch.com from Atchison, Kansas, now joins us to take a look at the marketplace. Hello, Mike. Thanks for being with us again on a Friday.
Great to be with you, Todd.
A really interesting day in the market, and that despite the fact that it appears to have been a really quiet day. But for the week, soybeans have put in either an outside up week or an outside down week. And because I'm in Kansas City, we haven't seen the final settlement price. Looks like it's going to be an outside up week, but it's an important spot for soybeans to take a stand, I suppose.
No, I think you're right. This is a big week for the weekly charts because we had a 2 week high in the wheat complex, and then we went lower on the week. The corn was able to go higher initially, but then as we got closer to the middle part of the week, we ended up going into the red on the week and actually took out last week's low, which was also a key in my chart, electronic continuation chart, a monthly low. And so the weekly charts are really signaling this market needs some support. And I think the two things that really came out this week and Friday as well was the US soy being purchased by China didn't get the job done in terms of feeding the bull again this week, Todd. And, we're multi-week highs, multi-week weeks higher in the soybeans at this point. And we've got now a gap below the market from when we started to go higher about a month ago. So the soybeans not getting as much support from the Chinese purchases. Clearly, it was because the numbers that we're seeing right now from China. Weekly export sales in corn really didn't do much at all, even though they were very strong at 2.2 million metric tons. Corn went back and joined up with the wheat complex in the weekly trade, I think, and this goes to the idea that this is the other second big thing that happened is we just there weren't enough bullish factors in the outside markets to bring the crude oil and the wheat back into the green. And we tried to go higher in the wheat. The crude oil fought us. The crude oil won. And we're back to where the crude oil and the wheat are finding each other as the best candidates for oversupply and kind of the poster children for oversupply in 2026. This is also because I think the Fed rate cut for December is very much on the chopping block, and the dollar rally helped bring those two, unfortunately, back together. So long-term analysis is holding. You need wheat and you need crude to really make a stand, and not a weather-related stand, more of a demand-related stand and a demand low in this market if we're going to find some real support in the ag sector.
Okay, so I have a couple of questions. One of them is, do you think that can happen? But more importantly, at the moment, and maybe not more importantly, but I want to check, do you think what is happening with soybeans, particularly, is simply a setback, taking some time, profit-taking kind of thing, or is it the potential for a change in direction?
The weather in South America has been pulled ahead. The weather market and the trade is looking and trading weather earlier than normal, in my opinion, Todd, by about 2 weeks. And I think it goes to the private estimates of about 1.5 million hectares of lost acreage in Argentina. That would be mainly corn and wheat. But if you tack on southern Brazil dryness and not the best weather pattern yet for Brazil and their crop potential, the U.S. China trade deal, along with the South American weather, would suggest to me, as long as that Pacific Northwest price holds up, then we've got probably more buying to be done by China, and that this is a pullback, but it needs to be supported by the wheat and by the corn at these price levels. And this goes right back to President Trump's cut of 40% in terms of tariffs for Brazil's ag commodities. Yes, it was beef. Yes, it was coffee, but that's a very currency sensitive thing to do, because as we recall, in 2025, we have seen the dollar weaken as tariff fears increased. So if he pulls back and the White House pulls back on tariffs, would that bring about short covering in the dollar and weakening in the Brazilian currency, giving them an added leg up in terms of competition against us with China if they have extra bushels? And so it got a lot more convoluted as we got to the end of the week. And I think you saw the trade migrate back to maybe buying grains and selling soybeans as a result of that.
A shortened trade week next week, Thursday. The markets are not open because of the Thanksgiving holiday. They will trade on Friday, though I'll be away from the marketplace, so we won't talk then. I will talk to you on Wednesday. Given that shortened trade week, do you have fears that there might be more volatility?
Oh, yeah, I think without a doubt there's going to be more volatility just because of the new policy news that we received. And at least in my mind, there's going to be. And because we're pulling the weather ahead early in South America, that will add volatility. I would say the best thing to look for, if you're looking for a low in the wheat market, and it's not going to come from crude oil or the dollar, especially with this talk of a Russian-Ukraine peace plan, weighing on the crude oil especially, I would put it at the feet of the weather pattern here in the United States. So far, the precip totals that we've received in the hard red wheat belt have been very disappointing compared to model estimates that we looked at yesterday and the day before. I'll be watching your state very closely in Indiana as well for the soft red wheat belt because of that drought that is also impacting you even more. And those crop conditions kind of got, ridden over and driven over this week, not really traded very much. And they were pretty poor in some key states. So if we see disappointing rains as we come back in on this early trade week, I would look for more short covering in the wheat from that. That could kick us off into maybe a more positive mindset.
And if the rains continue to fall?
I think we're on the same track that the commodity funds and the overall investment mindset would be wheat and crude oil are oversupply. And we got to take a note of what's happening in Bitcoin. I usually don't talk about that, but Bitcoin looks like a poster child for leverage just being pulled out of the market, that certain levels got hit, margin calls are really on it. And so we're seeing a real big hit to the Bitcoin. I'm a little bit worried that that's going to spill over into some of the other riskier assets if we don't find some support from some of these other things, i.e., crude oil and the wheat.
Yeah, so not just coming out of Bitcoin and then looking for safer havens and lifting the marketplace, actually having a detrimental impact on commodities.
It's a multi-trillion-dollar trade right now, yeah, so it's a big deal.
Okay, thanks much. We'll talk with you again Wednesday of next week during Commodity Week. I appreciate it.
Look forward to it. Thanks, Todd.
Mike Zuzolo is with GlobalCommResearch.com. He is in Atchison, Kansas.